In this video, we're going to look at an example of using the single-in scale-out method of trade management as discussed in the book, The Gartley Trading Method, New Techniques to Profit from the Market's Most Powerful Formation, published by Wiley Trading. In this example, we're going to be looking at a bullish Gartley pattern complete here at 786 at 81.69. This is a 5-minute dollar Swiss bar chart in Forex, and we're going to look at how to apply the single-in scale-out methodology here in Market Analyst. So the first thing we need to do is apply our single-in scale-out levels. Okay, so that's what I've done here. Our first level here is our entry point. And over here is our initial stop loss right here at 81.49. Once we've identified our risk on this trade, what we can do is set profit targets. Here's our first profit target, which is 50% of our initial risk, and our second profit target, which is equal to our initial risk. So what I'll do here is add some bars. Okay, and so this bar here, I've just added a bar. We would have been filled here at our entry point, and we leave our stop. We're buying 3 Forex contracts, dollar Swiss, right here at the 78.6% retracement. We put our initial stop in all 3 contracts down here at 81.49. Now let me go ahead and add some more bars. Now we have hit our first target at 81.79. That means we'd sell $1 Swiss contract, and we'd move our stop up to this level here, 81.59, which has moved up 50% of our initial risk. So worst case scenario right now, the market turns down and we get stopped out on both contracts right here. But the good news is that you've already reduced your risk. Even if you get stopped out right now, you've reduced your risk to over 83%, which is a big number. So let's add some bars now. See if we hit the second target. And boom, we hit the second target at 81.89. At that point, we sell another contract, and that leaves us with 1 open position, and we move our stop up to here to our entry point. So this is a really good place to hang around. So we definitely got a profit on the first and the second contracts. I'm going to turn off the single-in scale-out levels now that we've achieved our second target, and now I'm going to apply the 3-bar trailing stop to this trade. Okay, so it's telling us that we should get out at 81.77. We're using the lowest low of the previous 3 bars, and I'm going to keep on adding some bars here. Stop moves higher and higher. Zoom in here a little bit more. Okay, so there you have it. Stopped out at 82.36. With our initial entry right down here at 81.69. So that's an example of how to use the single-in scale-out methodology along with a 3-bar trailing stop. So thanks for watching this short video. If you'd like to learn more about the single-in scale-out method, the Gartley trading method, or market geometry in general, please visit our website at geometrictrading.com.